my theory, and just to put it as a joke, would be CZ needs to get pardoned, and very likely the president just launch its own stablecoin to send the trend. If those two things actually happen, then we're safe, and the American Eagle bless us to have the altcoin season.
We can clip this and push it out there. I mean,
by the way, just to put it out and say a bit more controversial stuff.
Meet Lucian Mincu, co-founder of MultiversX, formerly Elrond, one of the most ambitious projects in the blockchain space. As one of the minds behind Multiverse's protocol, Lucian has been going through multiple cycles while continuously developing new upgrades for the protocol. In this episode, we talk about the impact of a treasury company for MultiversX, the adjustment in tokenomics, the future of the protocol, and what is needed to be having a big altcoin run.
Binance and Elrond, well, the old name of the project, have a long-lasting relationship. Now it's called MultiversX.
I'm all in, and all in almost unreasonable over leverage with my life, with my investments, just to make sure that I'm locked in and there's no way out.
The upside of Bitcoin is 1.4 million if it exceeds in 2026. Would be bananas if we reach to 1 million anywhere within a year from now.
Whoa, I'm getting goosebumps. Just
which one is going to be the one?
We're asking all the tough questions here, but love it. Look, I think.
Before we continue, I would like to ask you for a favor. New Era Finance is designed and started to educate you about the future of finance. And I think that blockchain and Web3 is going to rebuild everything that we know about finance. And that's through those guests and the in-depth conversations that we have. However, more than 80% of you are watching this without being subscribed. And if we get more subscribers and more views, and we can start building this community, we can get better guests, we can improve the content, and we can start building. And in that way, we can start educating you even more. So I would like to ask you for a simple favor to check whether you are subscribed. And if you're not, please do, so we can start and continue to build this channel towards a bigger channel to help you all. Thank you very much and enjoy the episode.
Welcome to the show, Lucian. We start off with the first question, which is, what has excited you the most in the past few weeks in the markets? And I'm going to say not the crash. So anything else than the crash.
Oh, that's a good question. It's a very good question. So first thing first, great being here. Thanks for hosting me. And by the way, great conversation also prior to this one. We were just warming up. Very good. But going back, I think for me personally, I think I have a few bull cases that I've been most likely they're not rocket science, but one of them actually I'm always trying when there's so much uncertainty in the space, trying to reason for myself. Hey, what's one bet that if I zoom out, I think the space will work out. And one of them, for example, and working backwards from that bet actually is how I want to reason. And one of them is actually, for example, most likely super boring stablecoins, but stablecoins in the sense that, for example, you might have read that, for example, the Russian advisor to Putin explained how the U.S. government actually is planning to distribute the American debt to the global retail masses over stablecoin. Now, if I look and then reverse engineer to that, what's the biggest problem of the American economy? It is the American debt. Would they want to slow down the spending? I don't think so. Do they want to? Is this more likely that American people would rather find a solution for their biggest problem instead of trying to dissolve the problem? I think more likely like that. So ergo, actually, I would say, it's very likely the president just launch its own stablecoin to send the trend. They give the legislation, and now actually they're also very much trying to acquire and make sure that they control the infrastructure, how they would distribute that. So if I look, Coinbase owns Circle, Coinbase is as well owned by BlackRock. Just a few chess play moves that I think in that play actually is one of the cool parts. Now, back to why I think it's good for that and why I think it's bullish. I want this technology to win. I put my life into it. We put our lives into it. We put our money. We put everything into it. And we want to make sure that it succeeds. And succeeding means for me, just it has distribution. It has value and it improves people's lives. And that's, if only that alone is one of the things that achieves a few billion people, I'm happy with that. Happy to do and bring my contribution, humble contribution to it. Curious.
I mean, there's so much taking place in the markets right now that it's very hard to believe that the cycle is over, right?
100% not. I mean, 100% not in the sense, again, I don't think it even started. So I've been reading again and looking at all kind of data. For example, the business cycle, the monetary cycle, the liquidity cycle, because there were some changes in the previous administration, again, all starting from US out, the US debt, I think there's there's a process, I cannot remember the name, but the process where the debt is actually being rehypothecated or
Does the government shutdown thing?
No. But prior to that, actually, so there's pretty much every 4 years the debt is actually
correct. Yeah, that's now 5 years.
Yes,
they
exactly.
roll it over.
Exactly, and only if I look at that, that's one point. I think, by the way, just to put it out and say a bit more controversial stuff, I think my read is. So generally speaking, if we look at how the market looks like, I usually don't talk about markets. Right? I'm a technical guy, but now that
it's not financial advice anyway.
Yeah,
so,
no, it's 100%. So if I look, then basically it's Bitcoin, large caps, small caps. Bitcoin seems to have its moment very much, or getting there more than anything else. Then large caps found their way with ETFs, DATs, and so forth. But then it should follow also down the road. Now. If I look at from that angle, the controversial take would be actually, again, all starting with Coinbase owning the large cap. So US said, okay, now it's safe. Everybody owns Bitcoin. Government is all holding. They made sure that prior to that, actually, they hold 10% of the custody of the entire infrastructure, which is safe now. American Eagle comes and protects that.
Yeah.
Now, if I look at for the altcoin season, my theory, and just to put it as a joke, would be CZ needs to get pardoned. and which started also 2 weeks ago, the rumors. And then the next point would be, I think Binance would be some US government will just hold 10% or whatever from Binance.
I mean, that's we can clip this and push it out there. I mean, no, the thing is that Binance the coin itself is just a rocket.
Yes, but I think looking at and going back to my bet on the stablecoins, and then we can come back to MultiversX. Going back to the bullish or bulky swing for this industry, the question is now if the problem that you're solving, which is $32 trillion at today, the American debt that needs to be solved, and Paulo said, okay, he just posted his first picture with 1 trillion loading. I'm not sure if you saw it.
No.
And he said we're at 18% there for one company to distribute first $1 trillion from American debt, which is the biggest problem, to just put it and make use of it, productive use for people worldwide. Now, rethinking from there back, wouldn't you want to make sure that you're owning the distribution of that and you ensure the production and the distribution worldwide? And if I look at Coinbase is good for US, but who's the best worldwide besides US? Binance. Then if the problem is 32 trillion, how much would it cost me to just ensure that the distribution works smoothly? And I would put 50 billion on the table. Sure. Thank you.
Yeah.
But again, this is just chess a bit and just some interesting take. It's a humble opinion, not financial advice. And this is how I see that if those two things actually happen, then we're safe and the American Eagle bless us to have the altcoin season.
Well, I'm going to vote for this. If that is going to give me more return on my assets, then I'm like, good, give me that, right? So, I mean, if yesterday, at Zero Live, I don't know if it's going to be recorded, but Julien Bittel, the right hand of Raoul Paul, did a keynote which is called the Everything Code. I think it's such a good presentation because it says it's all connected to each other. and we are not having a business cycle yet. And once it happens, he actually says that the upside of Bitcoin is 1.4 million if it exceeds in 2026. Would be bananas if we reach to 1 million anywhere within a year from now.
Whoa, I'm getting goosebumps. Just, I'm not sure why this, but definitely.
Well, I would be very happy. But
me too.
Binance and Elrond, well, the old name of the project, have a long-lasting relationship. I was
100%.
one of the first few IEOs. I think the most successful one in terms of upside return, but also in terms of hype. And we did a interview in 2020 with Benjamin on my other channel. I think it was during the, what was it called? The 100 days of hypergrowth.
Indeed.
Yeah, right?
Indeed.
During that period, created even more hype surrounding Elrond. Now it's called MultiversX. Lots of things are happening. But take me through the past few years. How was it to build a protocol? What has happened? What have you learned?
Whoa. Again, you're asking all the top questions here, but love it. Look, I think starting maybe from the early days, Benjamin brought me into the space with he made sure that I'm all in, and all in almost unreasonable over leverage with my life, with my investments, just to make sure that I'm locked in and there's no way out. This is how it started. And then prior to that, actually, we research invested a lot into especially infrastructure layer ones, everything scalability related, and had the intuition that sharding and proof of stake would be the case. Fast forward, actually, no one believed that it's possible to execute 7 years ago state sharding implementation, and that's why we said, okay, fuck it. Did this out. That's actually how we started and said, let's take a challenge. We have nothing to lose. It seems like nobody literally wants this problem, and it seems like this is going to be the toughest one and the hardest one. So we better do that.
Okay.
And then that's how we started. So fast forward, I think technically speaking, we did pretty well. I think one thing that stood out and always was outstanding compared to anything, especially out of Europe and almost competing worldwide. The sharding and state sharding implementation, just to translate in simple words, what it does is pretty much taking here's the way I put it. Basically, you have a computer, a supercomputer. We say Ethereum as a supercomputer, and a supercomputer is still a computer. A computer has 3 components: CPU, RAM, disk, right? I think this is still clear for everyone. The way I look and map pretty much any kind of blockchain architecture is like CPU is the consensus. How do you interact with the CPU? You basically have requests, so to say, inputs. This is the inputs are equal to transactions, right? So you send transactions that are going to the consensus, which is actually sending inputs to the CPU. The CPU works with a very fast memory, which is the RAM. Usually they iterate on the RAM and it writes to the disk how we got there. So if we look at that, actually what we did, we looked at what's the way, how did we scale up any general computer architecture? We did not end up with one CPU with 100 gigahertz, but we have, look at NVIDIA, we have, the more threads we have, the more valuable the technology is. And it took us 40 years to figure out how to write software for this kind of stuff. It just, poor Jensen actually just needed to waste 40 years of his life until he become like the number one. But this is, I think, also for sharding. What it does is actually it takes and parallels. We have multiple CPUs that executes in parallel compared to like in comparison to any other blockchain way where all of them try to focus on one CPU, right? And try to make it just faster. But that's as the laws of physics. Everything in nature, just to quote my brother, everything in nature, society, and universe seems to be sharded by design. Everything, like if you look cities, why don't we have just one big city around the globe? They run in parallel. There are multiple cities. Why that's, and everything is. So this is actually applied to the principle of technology where we actually build this from scratch up. Everything costly, extremely costly and painful to be different. In like everything in this world to be different is a lot more expensive. And for that, actually, what it does, it allows us to run horizontally without increasing the cost of compute in any way actually to run upwards of hundreds of thousands of transactions per second.
Okay.
This is in short.
Yeah.
I'm a technical founder, just for context, so that's
Yeah,
I love to explain a bit. I hope it was not too.
No, I mean we dive into that a little bit more in the sense that for everybody who invests into crypto, we have Ethereum. That's the biggest economy that we have in Web3. Then we have Solana, which is high throughput, very fast, many transactions. Then we have a bunch of other things like Sui, Sai, MoveVM chains, whatever there is.
Yes.
Why do we need something that has the horizontal different states to actually go to the next level? What problem are you trying to solve?
This is a very good question. I think on the first side, if we look from Bitcoin architecture back, I think Bitcoin was designed with some principle of being censorship resistant and not ending in any way centralized or dependent on highly optimized machine that you could not run at home. So in simple words, if you want to be your bank, if you want to have a copy of the ledger at home and prove that you own those keys or those Bitcoins, you should be able to do it on kind of almost any machine. And even after so many years, it's still be able to do that. If I look at Solana, they took the American approach and said, look, let's have a shitload of value on this network, and then we'll figure out if it's really critical and important for those people that claim decentralization, if they really want to run it at home, or they would say money is good, keep doing it. Let the machine go, and then we're going in. So this is a bit just a difference. And I respect for what the Solana is doing, and I give them all the credit. We started from the same place, and I seeing what worked and what didn't. I'm speaking as a founder, and that cost me everything. I'm not just arrogant and saying anything. But with that in mind, people, I don't think, value in any sense today, as of today, any kind of really decentralized manner, or they say, okay, I don't think, like, if I would put retail hosting or individual node operators versus institutional, even the investors would want to see actually more institutional validators running the network than valuing 100,000 unique node operators. See, but this is just the way our brain is wired. I think you would want to say PayPal, Visa, MasterCard, even though you know that you're delegating your entire power and ending on the same place. But see, that's the tricky part. And this is maybe one of the points where we say, okay, what Elrond does is, as NVIDIA, I think as many other companies, I don't personally think we have designed yet architectures or software that is highlighting the true capacity of the network. This means we don't have yet designed exchanges that run parallelized on multiple shards. And this is up to me. This is up to us as founders to guide the discussion towards that. And I've been discussing, for example, with the guys from Jump, and then they said, yeah, exactly. What's the unique mode? And then, because if you look, for example, at trading is pretty much a shared state. You want to, as many people, as many machines, as many participants to have access to the same data. Where sharding is doing that, but not necessarily. While you have multiple shards, you basically split some sort of the view, but you have more throughput. Now it's again up to us to find the next version of architectures. And this also only applies if the theory that we are gonna scale to billion people. Yeah. If we're not, then it's the technology doesn't make sense much.
I mean, take the trading example. That's a good one. We had the crash on October the 10th. We saw that there is a huge difference between the exchanges. DEX, SEX pricing was off. Market makers were fully allocated into their inventory. They were not able to withdraw and deposit assets. But if you take one step back and you look at the trading ecosystem right now, then there are 50 DEXs and there are even more SEXs at this point, which are all their own single state in some way. And then you get the question after the previous crash of we should be having circuit breakers, but that opens a game theory of like if you do it and the other one doesn't, then everybody goes to the other one, which is the same of reducing leverage in some way. I know that you want to answer, but I wanted to finish
No.
first.
I'm thinking.
So if you say, okay, we want to have a modular blockchain ecosystem that is integrated with each other, then having single states is definitely a way of having efficiency, but then it reduces the way of communicating with each other. That's like the opposite, right?
Yeah.
How is that going to be fixed?
So first, let me just clarify, because I don't think that what happened is a technical problem. First, I think
No. It was yeah.
but and go and explain a bit. I think Nasdaq announced a few weeks ago that they will put the markets on chain. If the same event, the same incident would have happened on the traditional markets, think about who are the participants. Why are those markets regulated in any way? Because the participants that are actually trading bonds, trading stocks, trading actually are not about retails, are investment funds, pension funds, money market funds, like all kind of investment vehicles that are sustaining and operating in the society and serving nations, literally countries, and millions and tens of millions and hundreds of thousands of millions actually of people, billions. This is how the world operates, just to put it like this. Now, if by any chance those assets goes to zero, who's gonna make them a whole again? The state. And then just going in simple logic steps, would the state ever allow something like this, knowing that there is no third world war? There is no reasonable explanation why any of those assets, unless someone is manipulating or fucking up big time on the tech side, on the markets or whatever. There is purely unreasonable, and that's where you have a circuit breaker, as you mentioned, because the damage cannot be made whole by any of those participants that are literally pulling strings on the market. Now, this is how outrageous the case is. If we think that crypto industry and Nasdaq will move on chain, and the same shit show will happen, we're just naive. I don't think we'll. And for that particular reason, I think, again, going to the Binance, now knowing who needs to acquire a part of them, I don't want to, but I think it's just but again, just doing some controversial notes here. How would you acquire them a bit cheaper? And this is just one of the less opportunities, because I think the markets will be very much regulated. I think circuit breakers will exist on chain. This is most likely one of, the way I look at after so many years, one of the last times someone could afford and not go to jail like this. So either you're selling 10% of the company or giving something away for this one to be pardoned, and someone will look away.
True.
So think about like this: in which way you have a structure of systems, right? And we have not, again, we did not manage to get to MultiversX enough, but you have a structure of systems where you have trading engines that are in a box, then you have spot, perpetuals, all boxes differently connected, and then you have a box that wires actually the entire communication from front ends, APIs, and so forth. In a way, in which world the systems allows internally to operate and liquidate and actually go and trade against you, and you should be fine not being able to operate your stuff, and then it should be legal.
Yeah.
It's like I'm being kept hostage, and then someone literally stabs me from all the sides, and I should, and this is still legal. This is literally, it's money.
That's the whole difficulty of crypto, right? I mean, I think if you look at it from game theory and efficiency, I think circuit breakers in itself are not making markets efficient. If markets are efficient, then you let them go if it goes down.
No. I think there should be a limit. I do believe that given the way the monetary system works, that there are so many powerful players and participants in the market, if one has unreasonable power, as in society, if I have unreasonable power against you, and there you would say, yeah, but let the nature just set the right things in place. No, that's why there are some laws and say, hey, even though you have unreasonable power, and especially think about banks, right? How much money can they print? And they can literally manipulate whatever market you say, as you would be in a rat trap, and you would almost cry, say, what the how long should I still run in this circle?
Was it back in the day the slogan of Elrond? Wasn't it banking the unbanked?
I think
one of the first few.
Yeah, banking that bank on or the, and we can go back actually, but this is a very good point. I think it was new financial system, the infrastructure for a new
Yeah, I
system.
know that back in that period when it started
something.
was the one phrase that stood on, I think, on the banner on X or so.
Yes, something like that. I think it was related to that. So basically, coming back on that, one of the interesting points, but Benjamin is actually saying that one interesting way of looking what we're trying to build and evolve things is actually the fiber optics of financial systems.
Yeah,
and this is I think comes way closer to what we're doing. We'd love to just bring you actually what's up with the network again, and just come closer to us. I think for an updated financial system, if we look at stablecoins, the principle or the theory is that stablecoins are superior form of money that can settle at the speed of light.
yeah,
Right. And in order to do that, then they're breaking it down on very practical, technical terms. I think you need fast finality or instant finality, so in that, which translate to settlement at the speed of light. And then the question is, how fast can you literally produce the block to make sure that it's final from the first. So this is actually the biggest upgrade that we're shipping, which is so-called Supernova. So that's actually the one that breaks exactly those two primitives for fast instant settlement. Like as soon as any block is being produced is final and confirmed, that means that you can have redemption of the money. You can actually consider, like in Visa or in other payment schemes, you have 7 days, 3 days, whatever that settlement. In Bitcoin, you have hours. Like what's the the time until a block cannot be reverted. So in our case, we have instant, like bam. And then also, secondly, on top of that is the block time, which we're reducing from 6 seconds, because that was what was reasonable back in the days to have some buffer. Now we're going actually to 600 milliseconds plus parallelized blocks, so parallelized execution. So multiple chains altogether synchronized with one instant finality. And then the second update down the road would be actually 400 milliseconds and 200 milliseconds. That is finally coming close to and almost superior to Visa, MasterCard, and other centralized systems.
If you, I've got it here. It's the first stage was Andromeda.
Yes.
And then Barnard. And now it's Supernova. One thing I do need to say, you know how to market your stuff. I mean, Elrond, 100 Days, Hypergrowth, now these names. It's pretty cool.
Yeah, so the point...
if I read Supernova, I need to bring back my poker skills back in PokerStars. You had Supernova Elite if you were playing a lot. It's completely irrelevant. But if we look at Supernova and you say the technical terms of like 600 milliseconds, 400 milliseconds, 200 milliseconds, what are the prime Web 2 or Web 3 use cases that are your target group that you built this for?
This is very, very interesting. So first, I think we I'm not sure if you know that we took one big bet actually as an ecosystem with stablecoins. So on the one hand, we have one of our own company that spun off actually as own, which is a stablecoin issuer within Europe. It's called Xmoney. It raised 21.5 million actually in partnership with Sui. But there I would just put it in simple words. If Stripe has its own stablecoin and payment network, they have the distribution on the merchant side and the integration on the settlement and acquiring business. That's pretty much their mode, and trying to come to use and optimize their business over blockchains. Now, if I look at us, one thing that we have as Web3 is we can be also united prior that someone else will just dominate us. So we said, look, wait a minute. I think it's time now to unite, and Sweet's just the first one where I think we as an ecosystem, either we will let Circle to dominate us and then dictate the same way exchanges dictated the future of many coins, the same way I think stablecoins could dictate. And then why not actually unite us all into a journey where let's have our bet as well, as long as it's contained and it's very limited and it's reasonable, let's have that. So that's one of the first use cases. I think we built also the infrastructure with wallets, with everything that, for example, exported serving now both ecosystems or multiple ecosystems for a while already, which is again very cool that finally you have all the native pieces all together coming, and you have cards, spend debit cards for Sui, for X Money, for MultiversX, for all of them, and then you can actually complete the solution with finally making the integration as a whole, right? Where you have superior mode to pretty much everything. Now, secondly, I would love, and I think the ecosystem will explore a lot on the perps.
Okay.
Very interesting. I think we'll just give some space. I've seen a lot of experimentation on the perps. Very interesting architecture already built by some people from the ecosystem. Sent me some demos last night. Very, very interesting. I've been actually here in London. Also, I'm not sure if I should tell the names. Been with several other companies, also big trading companies that are here, just to go and have a chat around them. How do they see the space? And to quote one of the friends, he mentioned, I think L1s that do not have a perp might be punished the same and perp, and then from the revenue will buy back not the governance token, but will buy back the native L1 token. That's his full mode. And but just to quote, and this is one of the biggest trading companies worldwide.
Wow. Nice.
Yeah. So now looking at that, I think there is some interesting stuff, and I think now going back from that, I think sharding, I think is for the first time you will have literally the capacity and the superior mode for this kind of technology. Until now, AMMs and all that stuff needed high concentration only on liquidity, and be because of the high frequency trading engine and matchmaking order that could make sense and use of what we're building. Anyway, it's just we're going bananas here, and you're getting all the cool stuff out now.
No, I mean there were a few things that I wanted to discuss, and it's just like the thing that I asked, like, who are you targeting to be building or using MultiversX? It is because there are so many chains out there, right? Yep. So there are the nature of the layer one ecosystem has moved from just ETH to we fix ETH to we have very limited focused layer ones and then connecting each other. That's kind of the stage that we are in right now, with a lot of layer ones out there, and then you have new ones coming up that are being backed by big institutions.
Fully agree.
I think Canton is one of the newer ones. There are a lot of Bitcoin layer 2s trying to be a layer 1 in Ether as well, or in the EVM ecosystem. There are a lot of things happening, so it's sometimes very hard to understand why we need so many and who you should be targeting to. But isn't it then that the markets that we are targeting, which is Web 2, is so large that we need all these parties to do trial and error and see in 10 years from now which one is going to be the one?
Fully agree on that. Maybe just to make to build on top of that, I think the reason where the ecosystem is today is, generally speaking, to quote again some of the big investors worldwide, investors have punished projects that have not found a way to generate revenue, and with that revenue have the buybacks on even though and not buybacks to drive back the value accrual process back to the investors, and that is a punishment. It's unreasonable discounted factor on pretty much the entire ecosystem. This is why that's so a big discrepancy. Now, if I look to that and why where we are right now, I think we did good and superior on pretty much many aspects, especially again technically speaking. MultiversX and Elrond has been one of the top contributors by blockchain development for 7 years in a row. And worldwide, if you go on, I think most of the developer activities as an ecosystem, we are fourth place worldwide, but we are unreasonable discounted as we speak. However, there are a few reasons for that. First, why we're doing to do why are we here today and why are we discussing actually what we're discussing is we figured and understood that there are some big changes needed. First, I don't personally believe on long-term existence of blockchains unless they found a way to dominate the market. I think there will be even less and less space for people just larking around and hoping, okay, there will be a bull case and we will make it just because we exist. Yeah, I don't think. I'm less and less.
That has changed.
So I think I feel it. It's not that I don't believe. I think it's who am I to say that it won't happen that as well, and there might be the chance of luck, but I don't want to depend on luck. I think a lucky person and a lucky man is one that doesn't need a superpower to save him. He is lucky because he figured out to be always always succeed, and this is why I think, particular to that, we needed a change. So it's very controversial what we did actually, and people say, "Wow, you should not change protocol economics. You should not change that. You should not change many things." But here's the thing: I think 90% of the companies failed because they failed to adapt. And if you've been in the space 9 years, I'm getting goosebumps just thinking about it again. How much have things changed since?
But change is not bad.
Exactly.
Change is not. I mean, I've been talking to many founders on the podcast so far. Even like Polkadot, I think 3 weeks ago announced that they are going to change the entire tokenomics model.
Oh, really?
Yeah. I think
Polkadot as well.
Yeah, Polkadot as well. Or there's a buyback or whatever. You can check it on their Twitter. It's like a month old. What did we see even more? VeChain has adopted the entire ecosystem with a deflationary model. I think we all tried to build something back in 2017 to 2021 with the knowledge that we had back in the day.
100%.
And if we would have done it with all the info we have right now, it would be done differently. So if you change the tokenomics in favor of the entire ecosystem, that is based on the experience that you have. So there's nothing wrong with that. It's just the fact is that you provide info that people that are investing into the token simply don't understand or don't want to understand.
This is a very, very good point. But this is also very fundamental. We had on the podcast one of the early advisors, so Alex Tabarrok. Okay. You might know him, is an economist, world famous economist, professor, George Mason University and the Marginal Revolution, contributed on DeFi, on the DAO structures with Ethereum, with many of his brilliant mind. And then while shaping this, we also wanted to get the benchmark. The conversation with the American brain, like energy, with the mindset, was so refreshing. Like you got slapped in the face, and then he said, "Look, if you think that defending a $10 price per coin is a loser move, like if you think about people who have not came here and joined you to invest for $15, or Dutch is double the money. They want a big bet. They want the reason people leave is that they don't see a big move. They don't see action. And this is particular to that. And now just coming back to what we're doing actually. If you want, if I should, you think?
I mean, the next thing that I wanted to discuss was the economics proposal that recently was announced by you guys.
Yes, actually, it's in the time. By the time we're actually recording this one, is in the going live. I didn't stop my notification, but I assume that it should go live as we speak.
Okay, there you go. I mean, Benjamin made a long post with the key features of the economics proposal, but technically, it is more or less giving more value to the ones that are active in the ecosystem, lower inflation, more staking rewards, all those things, right? Or maybe you can
Yes.
explain it a
Happy
little
to
more.
do so. Happy to do so. So going back, I think one of the most important part is first we want and understood that there should be protocol revenue. Protocol revenue is what defines a network that is active, alive, and the protocol revenue is being actually driven by money velocity. Just to give a
Yeah.
sense, and explaining in simple words, I've been discussing with Circle, and then on the integration stuff, they said, "Look, but what are you looking at those days? What's? Tell me something. Don't tell me the same $10 million the integration fee,
Yeah.
or 50 million or whatever." And then they said, "Look, the way we look at it is pretty much we take the highest, the top wallets, top holders, and look at their activity. And the activity is a wallet that is dormant is way riskier for the entire ecosystem than a wallet that is fully spamming the chain with activity. Why? Because you can predict the behavior of the ones that is moving a lot, that is doing activity, against the one that is just doing nothing, and then suddenly it wakes up and dumps. Right? So just in simple words, and also the one that is actually moving the funds, it means that the money, as long as it's moving in the chain, all the participants actually are collecting. On top of that, are just building, and that's how economy works. And in order to do so, we said, okay, let's. It's clear that we need a big change, so we want to start with that. How can we increase the money velocity inside the chain? And in simple words, we want new capital brought in. That should translate first on the one hand, attracted more of off-chain of the exchanges, a lot of the EGLD, make sure that the participation in the staking increases and sets the trend into the positive side. We are already, I think, even right now, but at 49, 48 in the toughest times, which is, I think, still a very decent number. However, we target something like 65, 70%. That's I think, a very cool number. Now, on top of that, I think we want to make sure that there's new capital brought in, such as liquidity, which translates to Bitcoin, stablecoins, and so forth. How we're gonna do that actually is, on the one hand, you have the base stake that you're gonna get I think 9% APY, 9.2 if I'm not mistaken, and then we put into so just one step back. So basically, there are two big parts of the proposal. One of them treats the inflation, which is part of the block minting rewards.
Okay.
And that's actually, it's 50% of that goes directly to the stakers.
Yeah.
Exactly as I discussed, which is just you stake, you get 9.2 something, roughly up to 9.2 APR for EGLD, and then on top of that we have another 50% put on the side, which is actually split on 3 buckets. 20% is particularly for driving liquidity and increasing liquidity incentives on chain, which we're gonna do, for example, by incentivizing people to use liquid stake LST protocols. There are a couple of them, very cool ones, actually superior than technically speaking compared to many other stuff. Using 100+ liquid staking providers on the protocol. So very, very cool stuff that they're doing. And then in order to do so, we said, okay, what would be a case where in order to you use that meaningfully on chain, you would need to prepare it. You could pair it with USDC, wrap Bitcoin, and so forth, deposit it into those products, and then you will get half of that rewards or for you, and then half of the top from the 20% bucket will be evenly splitted across multiple protocols, that you would get actually more liquidity on chain, more volumes, more velocity, and this is how you close that bucket. Now, another very interesting point actually is would be the ecosystem growth. Now, and here's the tricky part. This is something I think is very, very again, a bit controversial for the space. And think about like this: you have 2 data centers. You have the cost of the operating nodes or the data center subsidized for next year. And then you have 2 growth theories. One of them, you just go and do podcast, maybe you do activations, all kind of activations. You go talk to conferences, all hackathons and so forth. And one of them, you go and literally pick some targets and say, hey, what are the companies that are highly likely to have product market fit? And you go and give them credits, similar to AWS, similar to Google, similar to all the big tech companies that are running the infrastructure and know how to grow it. And you take them and say, let's have the hardware oversubscribed first, and then we will see, and we can always filter out and cut from the credits out and flag them if they're unnecessary. But then at the end, I believe that the ones with which, given that you already have to subsidize the entire infrastructure cost, the ones that is giving out and taking bets will have 10 times more. 10 times more revenue, 10 times more usage. So that's actually we're building in inside the protocol and saying, hey, I don't think that printing coins, the printed coins that are not spent in the protocol are the problem that are your price is getting diluted. As long the coins are literally spent inside the ecosystem, this is the ideal case. This is the main reason why most of the chains are getting a lower price valuation, because the coins are not spent in the chain. Nobody cried like. It's a good problem to have that. Yeah, I mean, you need to spend more coins in the chain because the chain is so crowded and there's so many people using it. Good problem to have. But
yeah, I mean, if I think about that, there are two things that are important to understand, which is if you look at money velocity,
yes,
there is one big example that describes this the best, which is if at some point in time, the wallets of Satoshi are going to move, markets are dead. For sure. Like it goes down 50% or whatever.
More.
That is like if there is a old wallet moving all of a sudden, that's going to have an impact in the market. So what you would rather want to have is that all the money that is being stuck in the tokens are being used, because then indeed you can predict the outcome of the activity in the coming period. Then if you look at the entire impact on the markets, if there is more and more coins being stuck in wallets. So let's say you have 21 million Bitcoin and 18 million are stuck and not moving around. The impact of a transaction on the markets are bigger because the supply is less. So in the sense that if you want to grow the entire ecosystem, it's also network velocity, I think, or network effect, is that you need to expand and expand and expand, and then the money is rolling, and then the activity grows and the entire valuation grows because more people want to become part of the entire ecosystem. So that brings me to the question of if people want to be connected with MultiversX, how are you going to attract retail users, if there exists any retail user after October 10th though? But how are you going to attract them to come to you?
So I think maybe just going back to builders, because I think this is just to close the loop on that one. I think one interesting point that we're doing, and again, we're changing the developer rewards from 30% for the first year to 90%. So every single dollar. So assuming you're a builder and you have a platform that you're spending fees somewhere else, on the one hand, we are having and launching a program where we're going to subsidize all your user costs or your transaction costs for your user, as long you have bring meaningful computational on chain that has potential to be self-sustainable after X amount of months and so forth. We don't want to just spam the network. This goes. And secondly, if you want to make money with us, think about that from that subsidized amount. Once you have shipped the users and you brought your contribution to the network, 90% of the fees that are gonna be spent and even subsidized by us, you're gonna get back.
That's a lot.
So this is full shift compared to anything. I'm paying you, but instead of paying you, I won't give you any dollar until you actually bring your contribution. This is actually, I think, the fundamental shift on everything that we do now. We want to make sure, like, we've been told, let's give grants, let's help everybody. And then pretty much that translates to the entire industry where we are right now. What if you have the users already and I don't need to convince you anything? Like this is built in the protocol. You bring every single user, and then as we subsidize through the relayers your transaction cost, you as the smart contract owner, you just collect it. Bam. I think this is just fundamentally different, and this is something that will go. And this is one of the most to quote Alex Tabarrok, he said, "Look, I don't think protocols should be building themselves 10, 100 applications. Protocols should figure and fund and make sure that they have at least from 100 builders, 5 at least succeed." From the ecosystem that they will bring value back. So on the one hand, we do investment on the user acquisition, but then also fundamentally speaking, I think moving to outside of Europe is also one of the key points that will drive and make a big shift.
I think on that part, I've been talking to some other protocols that if you look at grants itself were used as a marketing vehicle back in the day. Well, I'm running a VC myself, so then you see in the blurb, you see standing, got a grant by X Foundation or whatever. But if you really look at the money spent and the actual outcome from the foundation perspective, it's near to zero.
Yes.
The similar case is there to be made when it comes to KOLs and marketing efforts. Right now, social media is fraught with a lot of bots and fake stuff, and nobody knows what the revenue is out of any post that's out there. So you start to see it backwards. If you create a lot of mindshare through Kaito, you get paid in an equal amount for the actual impact you have. Or if you become a validator and people follow you, want to earn rewards themselves, then they join your validator and everybody happy. Similarly with builders is that they received the grant, then did the most lazy work to actually finish it off, and then boom, let's go. And that's frustrating for a protocol that really wants to fund builders to build a project or a dApp, but it doesn't really get anywhere.
Yeah, I think even worse than that, RWA, this is a very good and bad example. RWA, whenever like I had a personal problem and someone told me RWA first for the very long first of time, just because there was no good example for people to understand and look at, it meant that you're gonna raise capital from the blockchain cryptocurrency, you're gonna sell it to dollar, extract the dollar value, try go in real life and buy some whatever physical stuff. And then eventually you're gonna bring the profits only, which is 1% of that in 10 years or 10% of that in 10 years back into a coin that it will never collateralize again or translate to the market cap or the equivalent dollar that you extracted from that system. So that's a broken system. It's outrageous. That's how we got here in many points. Now, to put also a good example to that, it's BlackRock. So you sit on $5 trillion that are assets that are locked and not being able to easily made liquid through the current laws and the current forms. And then you look at, hey, if I can get 1% yield on and collateralize those 5 trillion assets and get even 0.5% yield on 5 trillion, while I still hold the entire stuff, is it a good business? I think it's
I think it is. It's a pretty good business too.
So now this is the fundamental difference where I still believe, and I think it's a very good strong point, but people have not yet. So if you already have the RWA, yes, bring it on chain where you can collateralize it, you can do a lot of stuff. Don't do the other way around. Right? So this is a good example, similar example to the builders.
Got you on that. Yeah, that's, well, I mean, we are rounding off this show in a little bit. I think there are two topics that I still want to discuss, which is, I saw the notification about I think there is already a DOT with Elrond or MultiversX, or you're exploring one. I think at least I saw a tweet coming by regarding this topic. Yes. Why is that relevant?
So I think in simple words, if we look at going back to the beginning of the show, we spoke about where we are in the market. So it was Bitcoin, large cap, low caps. And the only reason why I think large caps or some of them have already overperformed the other ones is that they have particularly found a way to print more money. And in simple words, what it means to print more money is actually to collateralize some vehicles that you connect to the traditional capital markets. You extract or take a loan against those other assets or the stocks on those assets that you will buy back buy back again your company or the underneath token. So this is I'm repeating this pretty much. Stay there. You have Bitcoin, large caps, small caps, and even from the large caps, only few of them outperform. And if we look at what have outperformed, there are about I think 150 ETFs and I think around 80 or something like that, or even more DATs. What it does actually, there is a a financial engineering, pure finance, like the same way you have technological engineering, there's financial engineering, and Americans were always the superior form of financial engineering in anything. And for that, they have also the vehicle where you can inject tokens into a vehicle, place this vehicle, that vehicle is a company, different whatever structure, legal structure, and that one could be listed into the stock exchange, and against the stocks that the company is being valued against the NAV, so
net asset value,
net
yeah.
asset value, you could, in theory, profit in the sense that you can do a loop that you buy back your coin. This is what happened, and on this narrative, most of the coins have outperformed the rest. And why is that? I think those are again shortcuts that if we look at the new regulation and the narrative inside US is the president is shilling big time this industry. Now, if we look what it means, if you're an investment fund or if you're a pension fund or a large player into those markets, everything you need is green light for 0.1 risk, 0.1% risk. But in order to get the 0.1 allocated to you as a project, you cannot expect that they will go and each of them will make a Coinbase account and they will deposit into the custody and do that. So this is just a shortcut for that. And this is, I think, the shortcut to larger liquidity in the market. And if there will be a big wave to that would you want to be positioned in, because that's how you would be rated actually in the end as a project, as a founder into your upside. Right.
I mean, institutions are not going to be on chain if everything is as transparent as it is. It's one of the it's one of the flip sides of decentralization is that right now with Hyperliquid as well, all the big accounts are publicly known, so you can see the positions and it's being chased. Institutions are never going to be operating on a public blockchain. They want to have a private one or anything related with CK or any technology that is going to shield them. I think that's what we're going to get to. But what I wanted to ask is more or less the retail end user. I mean, you've been talking about builders and devs that can get more rewards. If a retail user wants to be more connected with MultiversX or wants to be active, what's in it for them?
So I think with the new economics, there's a lot of rewards. The beauty of it, there's a lot of opportunities and application. Finally, I think getting the value of that. So on the one hand, we built the engine and now we're putting the fuel in. I think on the one hand, as a user, the ecosystem is ridiculously undervalued as it is. It has been punished in all
pretty much everything in crypto at this point.
Yes, but more, even more to that. So think about that. You have, I think, 5 liquid staking protocols. You have sharding. You have the Ethereum 2.0 roadmap implemented. You have, I think, 3,500 validators. So if you would take by the book all the specs, it's almost unreasonable. Like I don't. Unless coming out from Romania when we built this, I think there's another reason, and just being still in Europe. And this is a very expensive lesson. And this is a question for you: how many unicorns you know that are in Web3 out of Europe?
Oof.
And let's give it three years back when the markets were a bit better. Because
I mean, I think you guys are an unicorn, so that's one. And then peak was it a little bit for like a week or so. They crashed down again. So there are a few, but it's not.
See the point. So if you look at the generally macroeconomics, you're gonna pay a price.
There are a few exchanges that are a unicorn, but it's not a unicorn.
Yes, and then also not obvious that you could replicate that in easy steps.
Yeah.
So the point is actually we paid billions of price, not actually moving out until now. Mm-hmm. And I think we learned the lesson the hard way. But the beauty is that, again, going back to investors and to users, I think the reason why, again, we're waking up is to make those hard changes. And I think I'm literally, without this, I would not do it anymore, and it doesn't make sense. But I think finally we got to the point where we called all the tough decisions, and now we get to the execution. Again, execution, the same way we executed on the tech side, now we're gonna execute on the financial side and distribution side.
I mean, I think it would be very helpful if the market as a whole is going to be moving a little bit. I mean, retail interest right now is just not there, and I get it. I mean, there's not been a market that has been applicable for the retail user to actually get a return out of. If we go into the end stages of 2025, but also into 2026, Supernova is taking place.
Yes.
What are the key points for MultiversX that you're looking forward to?
So I think there's a new roadmap, entire roadmap for that. So there, if I look on the technical side, again, starting because I'm very technical. So Supernova ZK primitives, so shielded transaction, which will translate into new revenue stream for the validators for the ecosystem. In simple words, you have base transaction, priority fees, and then shielded. Right. So this is just add on top, which has been in the works for a very long time. There's a couple of bridges coming up all along. People have waited. XLR layer 0 is in discussion, which will eventually unofficially you have get USDT 0, Tether, and so forth. Integration. There's finally on the economic side a bunch of incentives aligning everything that we have built to be used. There's stablecoins also with the X money, with our own stablecoin. There's DAT ETFs actually being in the works as we speak. And now that the government has passed, we have green light from the community to and the mandate to execute full speed on that. What else? And there is some. I think perps needs to be followed up. I think that would be a very hot topic for the ecosystem, and that would be actually very interesting to see how it plays. Might be that MultiversX gets its own perp tax for the L1.
Feels like you need to have one at these times.
Indeed. And then what else? A bunch of stuff. I think there's a old product that is called ViboX, which is actually at the intersection of AI and AI vibe coding and codegen and crypto, which we managed to actually write smart contracts and all that stuff for MultiversX, so it can write smart. It can run full stack applications as of today. As right now, it's very close to be launched. We're changing it actually to something very interesting. I would not, Benjamin will kill me if I tell that. But there are a bunch of stuff actually that I think will just shift and compound the value of everything.
Well, we should do a 5-year sort of rehearsal of the conversation that we did with Benjamin in a while to see to see how he is doing. Thank you very much for spending the time here in London. I know that you're very busy explaining the changes and the entire ecosystem and your view on the markets and what is required to go from not from 0 to 1, but from 1 to the next level. If people are looking to get into MultiversX or want to follow the protocol, want to follow you and all the steps that are taken, where can we find you?
I'm Lucian Mincu. I'm one of the founders of MultiversX, MultiversX.com, previously known as Elrond. One of the unicorns out of Europe, and humble to still build out of Europe for now. And happy to have you. MultiversX.com is the place actually to land in. Twitter, Telegram, everywhere.
Cool. Well, thank you very much again.
A pleasure being here. Literally good discussion. I think it was too short actually.
I mean, I see the guys looking already, so it's time to round it off. I'm sure we're going to have another chat in a while to see where you guys are heading to. I'm sure it's going to be an exciting time. So again, thank you very much and good luck on the journey.
Thank you very much. Pleasure being here.